I'm worried this is just going to sound doomer and gloomer again, so I really don't want to make this video. I'm really depressed, but I don't feel good right now, both about the economy, which I think is about to go down the pooper, and literally what just went down the pooper at 4 a.m. yesterday. Let's just say I got really sick because I had way too much caffeine. I told myself that I'm going to get into this routine where I could stay up all night long and I'll finally have my sleep schedule fixed because I'll just go to sleep at the appropriate time. But then I ended up with caffeine poisoning again, and let's just say it's not pretty. This is the problem with trying to do a Meet Kevin report video in the morning before your 5:25 a.m. live stream, and then you actually have to, put the news together for it. That was challenging. Let's just say it didn't work out well. And so this morning I screwed up, and after being sick, I didn't wake up on time, and I feel terrible about that. It's entirely my fault. Maybe I can finally figure out how to get this sleep schedule right over this weekend. But let's just say there's nothing worse than feeling like you got this collapsed sleep schedule as you're trying to do more at the same time as feeling like you really just want to go out there and go on a run and work out, but you got too much going on. Okay. With all that complaining and, pardon the French, bitching, out of the way, let's get into this economy that we're in. I'm really concerned. The consumer sentiment numbers this morning are really just sort of like icing on the concern cake. But we started with weak consumer sentiment data really with Etsy. That's when I really started panicking a little bit because I saw the Etsy numbers and I'm like, wait a minute. And this is Etsy, okay? Like, what do I buy on Etsy? I buy, a RuneScape Dragon Medium helmet, or a RuneScape crossbow, or there's a long sword right here, or, stuff like this. A dragon dagger, okay? Poison tipped dragon dagger, kind of like how I felt yesterday, like somebody stabbed me right in the kidney and just poisoned the snot out of me. But the reality is, Etsy, I think, is a canary in the coal mine, and I'm really concerned about that. See, Etsy gave us a really big heads up about what might end up happening with the consumer sentiment data this morning. And I hate to say it, which obviously we'll go through that, but I hate to say this, but I think people have forgotten that as much as it's fun that GDP can be built up by the military-industrial complexes and military spending, Biden bucks, or artificial intelligence infrastructure spending, when those things go away, I'm really concerned that things are just going to get substantially worse. Why? Well, because the consumer makes up 70% of the economy. I think we've forgotten that. We're not like China, where the consumer makes up less than half of that in terms of their economy. And their economy is in the poopers too. That's mostly driven by the fraud of the real estate bubble that they created. But, I mean, consider this for a moment. In case you haven't seen it, I'll just give you a quick run through here. Okay? Etsy in their earnings call, I thought, all right, look, their stock's been declining forever. Maybe, just maybe, they'll give us some kind of hope that the pain is about to be over. It's kind of like the solar folks. You had, Sunrun or whatever that told us, hey, we're confident Q1 is the bottom. Things are finally going to get better. Great. That's great. That's for people who actually have money to invest in solar systems and batteries that cost you, 50 to 70 grand, and you're willing to finance them at 7.5% to 8%, which is like, you may as well just pay the utility at that point. But whatever. So this is Etsy stock, and as you can see, it boomed during the pandemic. Duh, that's obvious. But it's literally been dragging along like the Titanic's anchor at the bottom of the ocean, quite frankly, since the middle of 22. So we're coming up on 2 years here of some of the worst price action ever for Etsy. And it just feels like it's about to get even worse than this. Like, even worse. We might, frankly, in my opinion, go down another 50%, down to basically the depths of what we had during COVID. Except after COVID, everybody was locked in at home, so everybody's buying crap on Etsy that they didn't need, and boom, we get this, euphoric run in the stock. Now, look, we're going to go beyond Etsy in a moment. Don't worry. We're going to go beyond Etsy, I promise. But look at this for a moment. I'm thinking they'll tell us something about a bottom, right? Because everybody keeps talking about, hey, the consumer's so resilient. Don't worry. The consumer keeps spending. Okay, that's fine. The consumer can continue to be resilient. But you know what I hate is when every company tells me the consumer continues to be resilient, and then some of them start going, I don't know, man, we're starting to see the canary in the coal mine, because that spreads like cancer to other industries rapidly. That is what concerns me. And so look at this closely. These headwinds are real, and they do not appear to be abating. Consumer wallets remain squeezed. Duh. Did you hear about the BNPL stuff? Let me write this in. BNPL. Look at the BNPL crisis. Ready for this? So there's this article Bloomberg put together from a Harris poll on phantom debt. And it suggested that basically 43% of those who owe money to BNPL were behind on payments. And of those households with over $100,000 of annual income, 42% were delinquent, according to the survey. So one of the problems with BNPL is that many of these don't show up on consumer reports like your credit report or otherwise. They're just sort of like little installment reports like Pay in 4 or whatever. But people are now BNPLing their rent, their groceries. The consumer is really like screwed. The bottom 50% is absolutely whacked. I mean, we just had, I think it was Gundlach and also Barry Sternlicht say the same thing. Yeah, here's Barry. Barry told us, we're starting to see the weakness in the consumer. He shouts out Starbucks, McDonald's, warnings on credit cards. He says 50 to 60% of Americans are out of savings. The penny pinching is coming, Barry Sternlicht says. Now, of course, he says we're temporarily propped up by migrants taking jobs that Americans don't want. And even though obviously we have an undocumented immigration problem, it's better that people have jobs than not have jobs and basically be on welfare here, which I suppose is a good point. But he's also got this really big concern that the U.S. debt is so large, the Fed's going to be forced to cut rates, not because inflation is coming down. No, inflation could actually be worse. But rather because you're going to start seeing 1 to 2 regional banks fail every single week, maybe as much as 1 per day, as these cracks continue to develop. Now, maybe Barry's just being a bear. Maybe he should change his name to Bear Sternlicht instead of Barry Sternlicht. Okay, that's a stupid joke. But it's serious from the point of view of we're starting to get a lot of smart money that's saying, hey, cracks are coming. Barry Sternlicht says the cracks are coming. Consumers are out of money. And we're seeing that at a canary in the coal mine. It's literally, Etsy, in my opinion, is literally the discretionary of discretionary. Like, I think you kind of go from like discretionary, which is like, I need a 3D printed dragon dagger with a poison tip. That way I could go look at my cool 3D printed poison dagger tip from RuneScape, and then I could write it off because it obviously made it into this video. Just like everything else in this room. See IRS. Okay, so there's like the discretionary of discretion. Then there's like discretion, which is like, am I gonna buy my kid a new Lego set? And then there's like the subscription discretion. Do I really need Hulu, Netflix, Disney Plus, and a newspaper subscription, right? And so this is, and then you get into like the discretion of like, do I really need the Starbucks or am I gonna go buy it at home? And am I gonna use the old mugs that I have or am I gonna go to GameStop and buy, you know, the Pokemon mugs? Also a write-off. Etsy is the canary in the coal mine. And I was really expecting them to tell us that there was some form of optimism coming. See, look at what we had in this Meet Kevin post that we did in February, okay? I want you to see this. So the last time we had earnings, because this will show you a change over time. Does anybody ever remember writing 5-paragraph essays in school and they wanted to do like change over time essays in AP, like A-Push? Anyway, change over time. Okay, what's the change over time? Look at this. Plenty of cash to cover short-term obligations. Etsy sees modest active buyer growth in the US and strong for international. And they're expecting volumes to decline low single digits year over year. Okay, so the growth is going away. Fine. But now the headwinds or like that, you know, some pickup in some of those buyers, that's gone. Now it's turned into consumer wallets remain squeezed, the headwinds are real, consumer sentiment remains distressed. The international market that was growing has turned into macro is quite challenging, especially in the UK and Germany. Consumers feel pressured. They're seeking value and discounts, and China is providing that. Our sellers have no pricing power. Even regular spenders are spending less. Yeah, I mean, you could see all the screenshots here, okay? It's bad. It's very bad. And so maybe Etsy just sucks. You know, maybe that's it. Maybe Etsy's just trash and it's over. But then we need to also look at Starbucks, which, okay, maybe they're getting beat up because of China. But then maybe we should also start thinking that if we keep making excuses on the consumer, then we might end up getting blindsided. And I don't want to get blindsided. McDonald's, for example, let's just put it this way. They're now announcing a $5 meal deal. I feel like they used to have a dollar menu. Now it's the $5 meal deal. And the $5 meal deal is an effort for McDonald's to, quote, lure the consumer back. In other words, the consumer is gone. Comp sales in Q2 so far are, quote, roughly flat. This isn't good. People were cut back on the Mickey of the Dizzles. And now they're coming out with discounted burgers to people back. Folks, we're not going to have to worry about inflation anymore. We're going to have to worry about deflation. Because you're going to take a simulated consumer, you're about to turn them into a dead horse, and people are going to go, can you get it up again? Hello? I don't know. Maybe I'm just being too bearish. But let me put it this way. Right now, the greed and fear index is at neutral. I think we're about to go to extreme fear. I don't want to say that. I don't want that to be true or the case. That's bad. But look, this is where we are right now. We're at neutral, and we're at greed for market momentum. Well, I think this is going to go all the way down over here to extreme fear within the next 3 months. Why do I see that? Look, we've had the volatile swoosh, the Nike volatile swoosh recovery. We've had it. It's been great. It should keep going. Could it keep going? Could we be wrong here? Absolutely. Inflation could really impress to the downside, and maybe we're off to the races next week. Consider inflation. The forecast for inflation right now are sitting at, let's see here, we've got CPI month over month is expected at 0.4%, and oil dropped like crazy, so I'm kind of surprised by that. I would have thought that oil would have drugged that down a little bit more. So maybe we'll come in low on that CPI month over month. But the CPI core is expected to grow by 0.3% month over month next Wednesday. And I mean, maybe we'll get like this glorious miss and we'll get 0.2s across here. You know, we really want to be closer to 0.17 to get to about 2% for the inflation target for the Fed. But those are the expectations right now. And quite frankly, you've got Bloomberg this morning saying after consumer sentiment data, things have, quote, taken a distinct turn for the worse. Yeah, that's because the consumer drives this economy. And so when people wake up and realize, oh, crap, the consumer drives everything. The consumer is the one who buys the GPT subscription or the FSD subscription or the AI subscription for their, workforce subscription at their office so they can have Copilot. The consumer is the one that either buys or uses all of that. And if the consumer loses their job, then their boss buys less seats for Microsoft Copilot. Consumer loses their job, they have to go cancel their GPT subscription. Then growth on the lack of software revenues we're seeing anyway for AI evaporates. The AI boom of building out AI servers is built. And then what happens? Well, you sit around and twiddle your thumbs as you wait to get through the nasty times. And the market crashes. The AI valuations right now are at a level that assume we are just going to keep booming forever. And some of it is somewhat ludicrous. Maybe we will. And I hope so, because if we boom forever, the market won't go into a recession, or the economy won't go into a recession. Everything will be just fine. But look at the Qs. The Qs have topped out. These are the Qs right here. Let's go to the average candlesticks. It's a little easier to say. We can't seem to get above this line. We just got through earnings season. Earnings season started out good, started getting a little worse when we started getting into the mid caps and the consumer. The consumer was really not fantastic in this earnings cycle. AI, Microsoft, they did pretty good. At least decently, though you did have some downsells, obviously, after earnings. Though I will say the earnings overall were good for this quarter, just you're starting to see that slowing growth in some of the forecasts, and so you did get some sell downs. Okay, whatever. So topping out on the Qs. You're also topping out on BTC. We know this. We also we're on this channel. This is a pretty obvious downtrend channel right here. We were trying to break out this morning. Look at this. This morning, we broke out above my 61.7 line. I wouldn't have known because I was asleep. But anyway, we broke out around 10:30. Sorry, this is 10:30 yesterday. My fault. We broke out around 10:30 yesterday and started running throughout the day. And right here, we got our University of Michigan sentiment data, which we'll touch on in just a moment. And what happened right after we got that sentiment data? Within the next 30 minutes, we dropped 1.2%, then another nearly 2%. And here we are now down about 3.4 in the last 24 hours. Right, straight through that line. Not even a lick of a pause at that 61.7 line. Now, maybe we'll recover. But the point is, Bitcoin, in my opinion, is a leading bad omen for the markets. It's a great omen when it's running. It's a bad omen when it's trending down. And I'm looking for catalysts that are going to say it's going to be able to run again in the near term. Now, I understand. A lot of this is what I call fundamental trading. People are like, Kevin, you're just a trader. You know what? That's right. I fundamentally trade. When I see things that don't make sense in the economy, I get nervous and I say, you know what? I'm gonna pack my bags. I'm gonna hedge a little. I'll spread out my stuff into multiple different bags and diversify just in case things get a little loony out there. Make sure we got our good old, what do you call them, the go bag at multiple different spots in the house. That's, the go bag, the one with your med pin, your bandages, and your Glock. Anyway, yeah, I don't know, man. These are the Qs. This is SQQ. Let's go to SPY. Where's the SPY? So the S&P 500, basically. Same thing. You're trying to top. You're trying to break out. I think you're going to be in for a world of a rejection here. Again, I could be wrong. But we've had some euphoria after Jerome Powell suggested, hey, we're at peak rates. I think he suggested we're at peak rates because he has to. Because maybe the inverted yield curve will actually end up being right. And it just ended up taking a little bit longer. We're the most inverted, or we've been inverted for the longest period of time, quite frankly, ever. But we're at 37 basis points inverted. Consumer sentiment this morning didn't help at all, as well as inflation expectations, which almost feel like they're disanchoring a little bit, or de-anchoring. But I'm not even so worried about inflation. I'm more worried about what happens when the consumer collapses and the canaries in the coal mine start turning into the coal mine collapsing. Look at consumer sentiment. First of all, I want you to see this. Expected change in unemployment during the next year. We're at the highest level since 2009. Briefly had a little bit of fear there at the beginning of 2023 as some of the big techs were laying off. Although stocks started rising again, so you did have a little bit of fear. But why all of a sudden are we getting this skyrocketing of fear again? This time it's not the first round of layoffs. This time it's the deep cuts. This time it's the Javier Milei, chainsaw, Elon Musk. We're going to expand the supercharger team. We're just going to, or a number of superchargers we have. Don't worry, we'll invest $500 million into superchargers. We're just going to fire everyone at our company on the supercharger team that happens to have experience with permitting, land use, negotiating leases, negotiating win-win deals for a long term with operators of the facilities. We'll just get rid of all of them, and we'll let our competition, like BP or EVgo or Blink, hire all the Tesla folks that just got fired. Yeah, that's not something that you do when you think you have enough cash to really get through the year, and it's not something that you do when you think you're going to grow a portion of your business dramatically. I'm nervous. And Tesla's just the beginning. All of these people, they're going to be the first to stop buying on Etsy. I mean, I understand they were probably paid, reasonably well while they were working at Tesla, and their stock has probably performed. I'm sure from their earnings they've got plenty of savings, but now you got to find a new job. And, I just think of the anecdotes of people, and this is just an anecdote. We know plural of anecdote is not data, but I just think how sad it is. There was a story that was circulating on X or Reddit or whatever, where basically an engineer got fired in December, took him 3 months to find a job, lands a job with Tesla in March, 72 hours before he's supposed to get his badge here in May. Sorry, your position's been terminated. That's scary. How is somebody in a position of that level of uncertainty going to buy anything on Etsy? Well, let me tell you this. They're not. How are they going to buy the latest iPad? They're not. They're going to buy the stuff they need. I think that's one of the reasons why Walmart and Amazon and Costco are doing well right now, because you've got basically this, people just have to spend where they think they can get the best deal, where they can get the best value. It's sort of like what Etsy said. People are discount driven and looking for the best value. And so it's concerning. So not only do we have this expected change in unemployment, so basically fear going up of people getting fired. I mean, here's another one. Look at this one. I got to fix that typo here. Those making $150K or more worry about it more. 72.48% of those making $150K or more worry about being fired, versus 50.26% of those making $50K or less. Mind you, these are really high numbers. Job security concerns are rising, and it's not good. Like, job security concerns going up imply that people are starting to see some writing on the wall where they're working, and they're going, crap. Maybe if you're like a startup that's well capitalized and you could ride out whatever storm there is, there's less concern, obviously. But you're at some of these big companies that are beholden to their shareholders, and they got to prove some EPS growth in a depressing environment. More people are going to get axed. It's scary. So, again, I really hope I don't feel too doomer and gloomery here, but it feels like a very bizarre time. I want to give you another analogy, and then we still have to hit those expectations. But I want to give you this analogy. And remember, an analogy is a comparison using like or as. So I want to compare 2024 to 22, 11, and 2019. And mostly I'm using those just to pick something within the last 15 years here, right? So in 2019, what was the world like? Oh no, China and the US have a trade war. In 2011, sure, you had, uprisings in Egypt and that, and Steve Jobs resigned, but what was the fear in 2011? Oh no, there might be a double dip recession that'll tank real estate. Ended up being the bottom. In 2020, it's like, we're all united against COVID. We're all working from home, and everybody's united against COVID. And what do you have today? Well, business feels like it's slowing down for many people. This is probably the hardest time ever to be an entrepreneur and grow a business. Probably the hardest time ever. Could you imagine trying to be a realtor today, a lender today, or trying to grow a business and get more clients in this sort of environment? People are going to start having blood coming out of their eyes because they're staying up so late going, I need to find more work. I'm not trying to make a joke out of that. I think that's sad. It's depressing. Consumer sentiment crashed this morning. We're going to touch on that. But, think about this. Cash liquidity is extremely tight. We talked about the banking charge-offs, that the entire sort of industry is just sort of like, all right, so where were we? It's still on my mind. Debt payments are rising. SPY and the Qs are topping. Geopolitical crisis just feels gross. The Israel-Gaza issue's not ending. Russia, Ukraine, Sudan. Government data says everything's fine and GDP is supposed to be 4%, but I think it's delusional. Prices are high, which is still frustrating people. We talked about job security concerns. You got the immigration fear and the border crisis, protests going on. It feels like a lot of negativity. And who knows, maybe that's just emotional, but it's not just me. You could see it. Look at the data. Year over year, sentiment and conditions are up, but month over month is collapsing. The index of consumer sentiment on a month over month basis is down 12.7%. Now, yes, we are up across the board on the year over year. We are better off than where we were. But what concerns me is not the comparison to last year, it's the trend now. Because if this 12% turns into another negative 12%, and another 12%, and another 12%, we'll be in the depths of sentiment in the span of, 2 or 3 months. So it is concerning. And then, of course, we saw the inflation expectations. So my take right now is twofold. First of all, hug your family, focus on your health, take a walk, start running, work out, get away from the insanity of your phone, delete, TikTok and Instagram and X or whatever, and just get value. Try to get value in what you're listening to, and get different perspectives. Listen to bullish arguments, listen to bearish arguments, and then make up your own mind. How are you doing? Leave me a comment down below. How are you doing? How is your job? How is your wife's job? How's your husband's job? How are your kids' jobs, if they have jobs? Or if they're old enough to have jobs, I should say. Because if they're old enough to have jobs and they don't have jobs, maybe that's actually a tell. And is there really this belief that we're about to just rocket ship up to the next level here? I don't know. How? I guess I just don't see the catalyst. Are earnings supposed to beat this delusional level that we've already hit? I guess what could skyrocket markets is you get a big CPI miss, which would be a beat. It's weird how they word it, but basically instead of getting like 0.4 and 0.3, you get like 0.1 and 0.1, and then everybody's like, yay! Oh, we're going to start making a trend of inflation disappearing again, just like we did at the end of 2023, which could entirely be possible. I don't know if it'll happen as soon as the April data, but inflation could definitely tick down rapidly. But the question is the consumer still going to be alive at that point? I don't know. So I can't help myself but feel a little depressed. So, as usual, I send out alerts to some of my thoughts and trades that I'm making in the Stocks and Psych group. I did open up a little bit of an out-of-the-money short, which is probably a bad idea, but it's not a big trade. I don't know. I'm just starting to create it, and I'm starting to think to myself, okay, maybe I establish a little bit of a position now, and then if CPI comes in worse, I'll double, triple down on that short. I don't know. Maybe I just need to take a vacation to a beach and have a beer, and it'll all be okay. I do think it'll all be okay. The question is your business going to survive? Is your job going to survive? Is your mortgage going to survive? Is your, is your business going to? Those are all really important things. There's a reason my real estate startup has zero debt. There's a reason I am heavy in cash right now. Me personally, it doesn't really matter because it's look, if it runs, great. If the markets run, guess what? That's fantastic for my startups. Everything will be just fine. If the markets fall, we'll survive. We'll be fine because we have cash. I'll survive. I'll be fine because we have cash. So, either way, it's fine. I don't really have this FOMO feeling because, again, I think, if the market skyrockets, then the startups will do really well too. So it's okay. It's sort of like I've got so much invested in different directions that it really, either way, it'll be fine. But getting through this 2024, obviously you got the election cycle, but I don't really look at the election cycle so much when I think of macro. But getting through this next year is going to be the big one for everyone, I think. Anyway, thanks so much for watching. Good luck. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.